It is Monday the 14th of April. I hope everyone's doing okay because we've had a pretty wild week last week. However, this weekend we had a really nice big full moon, kind of change of energy. We ended last week on massive, 125, 130% tariffs on China, which were lifted on Saturday or postponed on quite a lot of consumer items like computers and chips and important stuff, which I kind of didn't get because I thought, God, are we just going to tax, sneakers and t-shirts, and is that the, really the manufacturing we're trying to bring back? However, I thought it set us up for a really big tech rally Monday, which would potentially really help crypto because it's still so correlated with the NASDAQ. However, all of that got tempered on Sunday with actually they're going to be a kind of different tariff category, and the new, chip tariffs are going to be announced this week, and so that kind of put another, we're really back to tariffs on, tariffs off, and it's really throwing the market around this week. Luckily, all of the drama in the bonds and treasuries didn't hurt crypto very much last week. Bitcoin is still holding that really nice 50% pullback level, and stuff is looking, not too bad. I thought everything was looking okay, obviously, and then until yesterday, and we really kind of had another really nasty drama, I think, on the level of Luna. 6 billion in value extracted from the OM crypto in 30 minutes, which is huge, really, when you think they're all linked to a mantra. So what happened was, let's take a look at this chart. Let's find our OM chart here. I put some fib retrace levels on this. So this was the really nasty drop that, as you can see, really happened in an hour. So it all started when a wallet linked to Mantra sent 3.9 million of OM to OKX, and that kind of caught everybody's attention pretty quickly because the team behind OM control 90% of the supply, which means they can basically crash the price at any time. And so that kind of broke the trust. In fact, the trust was really already broken because a month before Mantra had done an airdrop, but right before the launch they blacklisted 50% of the wallets signed up for it. They called them bots. They didn't give any proof. The community kind of felt that it was all a little bit dodgy at that point, and then other kind of shady stuff started happening. Market makers were allegedly keeping the price really high. There were changes to the tokenomics, and airdrops kept getting delayed, and then the founder went inactive for the last 24 hours, and that kind of set off some panic. Now, was it just panic or was it selling pressure? There were huge rumours about big over-the-counter deals, and this crashed, and there you go, 6 billion wiped out, and people got really hurt. I think stop losses were hit, leverage positions were hit, and so people were completely wiped out. And it dropped from $7 to, which is up here, to 0.5, which is down kind of where we are now. And there's no updates on the Telegram channels. So this is a really good lesson in how shady some of these projects are and how people need to be really careful. And unfortunately, it does nothing for the image of crypto, unfortunately. So that's where we are with that. In other news, it hasn't really kind of been all bad, I don't think, in the crypto space. And this holding up in Bitcoin, let's start with Bitcoin. And the bounces have been really pretty impressive. So big picture, let's go out to the weekly here. If we go all the way back from these lows, I would mark this 87,000 level, which would be a back test of this big 236 fib, as resistance, but it's also resistance for a number of other reasons. So if we, as I said before, each of these swings, we've never pulled back in Bitcoin in each one of these swings since we made this low in 2022. We haven't pulled back more than 50%. And here, of this most recent swing, which comes from that last August low, we've really held this 50% level pretty nicely. the problem is we're a little bit trapped in between these weekly moving averages, between the 50 and the 20, and this kind of 86, 87 level. 87 if we count it as a back test of that bigger 236 fib. But if we look at this basically with this 50%, you know, with fib levels, they're like a ladder. You climb down between each level, and getting back above the previous one that you dropped underneath becomes key resistance on a closed basis. So, oops, I moved this, let's put it back. So if we look at this, you know, bouncing from this 50% level is great, but we need to close the week back above this 38.2 level, 86,300, and intraday I would call 87,000. Intraday trading, you know, pretty important support and resistance as well. If we get above it and we can hold that, we're going to keep going higher. For now, it's possible with this holiday week and that we end up going sideways. Why am I calling it a holiday week? Because in most of the world it's the start of school holidays. It's Passover from now until next weekend, and it's Easter holiday next weekend. And quite often in markets, that can be a little bit of a sideways week, which, to be honest, after all the volatility that we've had, it wouldn't be such a crazy idea. So short term, when I'm looking at these levels, we haven't quite broken out yet. I've drawn a trend line all the way back from the high here on this 4-hour chart, from the high that we made in January on the inauguration day. And we could, I suppose, widen this out a little bit. But that, if we do that, you know, this trend line from this January high also lines up at this 86,300 important resistance level. And I wouldn't be surprised at all if the first time back to this we don't get a little bit of a knockback. And if we look at where our daily moving averages are and the daily 200 moving average, and here we are sideways at the 50, this is actually, having had a really great bounce over the weekend, this is pretty interesting resistance. It's also really interesting if we can break out and hold above it, but it's going to be pretty tough to get through it first time. And you can look back where we have tried previously, particularly with this 200 moving average, you know, we spent like 10 days getting stuck before we could break above it, and even then we just kind of went choppy and sideways through it. So although I'm really impressed with this bounce so far, unfortunately it's not quite the bullish reversal that we kind of need to see more upside. Now, I am pretty excited about more upside if we can break above these levels, because we are bouncing again from this August low last summer. We are bouncing from this 50% level. Mean reverting markets tend to keep mean reverting. So if we can break out above this resistance, our next upside target becomes 91,897, which would be the 50% from this high. And I would expect us, if we got up there, to have a little bit of a pullback and potentially 50%, because mean reverting markets tend to keep mean reverting, which would be, we would see something like this if we get up there. So if we can break above 86, our target is 91,897. I don't know if this 50% pullback is a bottom and we're going to keep going higher from here. There is so much uncertainty going on at the moment with these tariffs and how the market is being kind of flung around, reacting to them. And I don't know how we're going to react to these news about the chip tariffs later this week either. So it seems to me that Donald Trump has had his hand forced a bit by having to delay the tariffs. I don't think he wanted to, and I think the bond market forced him to. And I'm not sure that he is ready to give in yet. So I think he wants more out of it. You know, he's taken huge political risk doing this. So that's how I see Bitcoin today. And short term, when I look at this, here we are really since yesterday, we've been trading sideways, hopefully building a little bit of a base, but you know, I tend to like to see three-wave corrections. So if this is one, by that I mean we could end up slow start to the week seeing something like this before we make an attempt at this breakout. So that's how I'm seeing Bitcoin today, still under really important resistance. Not saying that we can't break above it, but it's pretty tough. In terms of other cryptos. There are some really nice setups. I know I spoke about Ripple before, but when we look at Ripple, very similar to Bitcoin, holding a really nice 50% retrace of the most recent swing. Here we are today though. I'm going to take this trend line away because it's only got 2 touches. Here we are again, back at the daily moving averages, the daily 50 in this previous swing high. I wouldn't be surprised again if we see a little bit of a pullback here, but kind of an inverted head and shoulders pattern or something like that wouldn't be, provided we don't pull back too far and we don't take out this swing low around 1.96. I don't think that would be a bad idea at all. It would be a really nice bullish pattern, and this 196 level is all these previous lows that have been such important support, really. Basically since the end of 2024, this has been kind of the bottom of Ripple's range. So if we were to have a little bit of a pullback this week, that's where I would look for support if we were going to set up another push higher. And I kind of really do like the bullish pattern in this chart. I like this ABC correction, and above this daily 50, I think we should see, again, just like Bitcoin, our first target is going to be 50% of this whole move. So 50% of this whole move puts us up here at 2.5 in Ripple for first target. If we can break above that daily 50, 2.5, and then we may see a bigger 50% retrace before we continue higher, just because that's how these kind of 50% moves tend to play out. Okay, let's take a look at Solana, which everybody is wondering what's going on with Solana, and are we going to keep going higher from here? If we go out to the weekly on this one, unlike Bitcoin, we went a little bit further. If we take the all-time lows to highs in Solana, we pulled back to a big 61.8 fib retrace level at 112. We bounced from it pretty nicely. I actually thought we were going to double bottom here and keep going, but we did one of those really nasty false breakdowns. Those false breakdowns, though, when you get back above the level and they then become support, which is exactly what has happened last week in Solana, here on this pullback, it means that we've recovered it, and it was just a false breakdown kind of overshoot, which tends to happen at 61.8 fib retrace levels quite a lot. What I'm quite excited about this one today is, unlike Ripple that we just looked at, potentially we're going to try and push above this daily 50 moving average. Now, the other good thing you can say about a bounce from a 61.8 fib level is the fib pattern that you form is the first target is back to the 50%. So we reversed to the 61.8. So our first target is here at 147.50, which is this big 50% level through the middle. We've been back and forward through this level a lot, and that level was also when we bounced from the 61.8 in March. That was exactly the resistance level. So we could very easily, we could have a nasty pullback there again, but our first target, if we can hold above this daily 50, is 147.50 in Solana, and because this is a big 61.8 fib level, it's the golden ratio zone. So if we get above and hold above 147.50, our next upside target here is 182.3, which is where we go back and we back test the daily 200 moving average from underneath. So short term, a little bit sideways consolidation. I wouldn't be surprised, because corrections are very often 3 waves here, and so it's possible that this is in fact just over the weekend the first swing of a bigger 3-wave correction. It depends what the rest of the market does, but if we, in crypto, it's very much the case that a high tide floats all the boats, and if we do see a pretty good tech rally today, with the relief of these China tariffs, then I think that we could see a breakout of this sideways range, and we would need to hold above these highs at 134, and if we can hold above 134, first upside target is going to be a retest then of this 147.50 level in Solana. And again, if we can break above and hold above it, and sometimes when you don't get through these levels first time, so it'll look like this, you get knocked back and then you'll go sideways through it, and then you'll get above it, and then it's support, and then that's it can mess around at these levels, especially ones that are really obvious that everyone can see. So 147 is going to be key. Holding above it gives us a really good upside target of 182, but we kind of really need a across the board pretty decent risk on rally in crypto for that one to happen, unfortunately. Let's talk about poor little ETH that's been underperforming so badly. I keep looking at ETH against Bitcoin because for me this is key. Now I don't really want to be getting into ETH if it's underperforming Bitcoin. I'd rather just be waiting until it reverses. And we are still sideways in this downtrend, although we've had a pretty nice bounce here. And we could argue maybe we're attempting a little bit. Really it's in lockstep with Bitcoin, and it's not outperforming it. And so yeah, you could put your toe in some ETH if you really like this one, but I don't see it. I think if Bitcoin will rally, so will ETH, and they'll be pretty much of an evens for now. So if we take a look at where we are in the US dollar, now if we look at this big picture, and remember, I'm always measuring the swings because there's a really good relationship between them. So if we measure from the high in 2021 to this low in 2022, this pullback has brought us back to this swing being 61.8 of this bigger one, which is very common in corrections. We have an A, a B, and a C leg very often is 61.8 of the first swing. Also, if I put my fib retrace levels from this low to this high, this is also a big deal 786 fib level. And when I look at the price action, I would say this is a doji or a false breakdown. Now, quite often at a bullish, this is quite bullish price action, and this is a combination of really good support levels. If we look left, really good support and resistance as well. And so this is the kind of level where we could see a little bit of a bottom. Certainly we've stopped going down, which is good news, but we're not going up yet. We need to take out these highs, and really it's a little bit of a sideways range. And so the problem with you when you're in a little bit of a sideways range like this is, it can last a little bit longer. Just when you think it'll go, it doesn't. It'll take another retest of the lows. But if we were to do that here in the ETH, because this is such a good level, I don't think this is a bad idea to look for a bottoming pattern, a higher low or a double bottom. But right here at the highs at resistance, I kind of really need to see it break above this. And at this point, if we look left and how this 20 moving average has been resistance here when we tried at the beginning of March, again end of March, and again here on the 2nd of April, above this daily 20 moving average and above these lows. If we were to continue to push higher today, that's kind of where I would like this to, I'd like to see this, and that puts us above 1,726. Then our target becomes 2,100 in ETH, and we can start talking about potentially a bottom. For now, little bit risky. A daily close above this 1.75 level, it is really. If we can do that, I think I would be tempted to buy pullbacks to look for that bigger push higher. But for right now, at this resistance level, I'm kind of on the sidelines, and there's quite a few charts that have really performed well this weekend that are at pretty interesting resistance levels. So one of them here is Tron. And you can see that we've been in this sideways range, and it looked like, if you're a fan of trend lines, you could draw this and say, oh, this is a contracting kind of wedge going on here, and this is a breakout. The problem is when you draw these wedges like this, the risk level is that that's not what you're looking at. And actually what we have just done here is an ABC correction back to the top of the broader range, if you like. And so I always look at these and where is the measured move, because that's going to be where the risky place is. So if we do this here from this high to low and project it from here, you can see that we've stopped at 0.26 at that equal measured move level. So potentially this means that back underneath where we thought we broke out and back underneath, this would be bearish. We would confirm this as an ABC correction, and we would be continuing lower. So the other way I always look for resistance is that first 236 fib level. So if I measure from this high here to this low, lowest low, you can see that this 0.26 level is also our 236 fib level, and the first time back to it you kind of tend to struggle to get through it. So it's possible that we have a little bit you know, I would, if you've been long in this, this might be one of those levels where we fail and we see a little bit of a bigger pullback. I would only be bearish back underneath 0.24. So if you've been in this little attempt at a swing breakout, pay yourself some here, because just watch this doesn't turn into a bigger reversal. Now, just a little bit sideways and a bear flag, and then continuing for a breakout. If you get out of some, you can always get back in again if it does that and it breaks out, and you know where you're wrong, because you know where your resistance here at this 0.26 level when we look at this on the hourly. So that's where our resistance is in TRX. FARTCOIN, massive outperformance this weekend. When we looked at this last week, we looked at this lovely inverted head and shoulders pattern, and we said, you know, sometimes when you think you've got an inverted head and shoulders pattern, it turns out not to be, and you'll fail at an equal measured move level. So if I measure from this low to high from this swing, you can see that we've pushed beyond it. It was at 0.796. We pushed beyond that equal measured move level. So as long as we hold that level, we're still going higher. And if I put my fibs on from the high in January to the low that we made here in March, we're holding above this 236 fib level as well. So some sideways consolidation holding above this level should see us continue higher from here, and our next upside target is 1.16. So this is really kind of, I'm not going to draw it, but this is kind of where our key support is. And we've also, look, made a very nice three-wave correction. The only thing that concerns me is sometimes when you draw a really nice three-wave correction, you'll just see three waves the other way and it'll turn into a bigger correction. So this will be 1, 2, 3, and then you go 1, 2, 3, and then it'll just be like this, and then, you know, you go again. So key support then is 0.79. As long as we don't get underneath that, and by that I mean get underneath it and then it becomes resistance, so we make a new low, that would be a breakdown. This looks good in FARTCOIN to continue higher, which, you know, go figure. FARTCOIN. Let's take a look at some other charts that everyone is interested in. Let's take a look at, this is a daily chart of hype. Have I got this on this chart here? Let's just put it on here, because Hyperliquid is a this is another one which I think is quite interesting when I look at the daily 50 moving average. Holding above it, going sideways in a little bit of a bull flag is interesting. Now, there is resistance. This is this swing high, which is always going to be a little bit of a key level to get above. And if we go left, it's also these lows around here as well. And we could argue, if we go from this low, actually maybe the closing price is closer to it, 16.19, and when I'm not sure, I always look for that big 236 fib level. And if I put that on, that's exactly where we are. It's actually 17. So above 17 would be a bigger bullish reversal here in Hyperliquid. I'd be looking for 25 next, with maybe a little bit of a wobble level here in the middle at 21.8. Sometimes the first time back to these 236 fib levels, you can't manage it, and we could end up making a bigger, maybe inverted head and shoulders pattern like this. But for me, this is pretty interesting as long as we hold above these daily moving averages. It looks really strong. So I'm either going to be waiting for a three-wave correction here. So we've had like one swing lower. A nice three-wave correction that turned higher would be very interesting, or a break above this level, this 17 level, and holding it as support would be a pretty good long entry, and that's what I would be looking for in Hyperliquid. Looking really strong, but this is resistance. So what that means is if we end up making a double top here, and then we break these lows in the middle, we're likely to see a bigger correction. So if you're long of this one, you might want to lighten it up then if that breaks down, because then you can buy it back cheaper. And you know, maybe a 50 or a 61.8 retrace for an inverted head and shoulders pattern here, I think would be a really good look. So Hyperliquid, big deal level, but if it breaks above it, lots more to come. So stuff is getting, not everything looks terrible. Unlike we've seen in some charts lately. Here, let's take a look at some more which I got my eye on, or people are talking about. So another one is SUI. Underneath, you know, this is a pretty tempting because I keep looking at this. And when you start regaining these moving averages, or on the daily, if we can get above this daily 50, we're going higher. For now, unfortunately for me, it's just a bounce and a downtrend. This is one of the ones I've got on my watch list, so I keep looking for that bullish reversal. And when I put my fib levels in, you can see that we dropped underneath the 61.8 level, which can be messy. And we haven't quite bounced from this 786 fib. But if this is just a messy 61.8, if SUI can hold above 2.5, I think we can call this a bottom and look for a bigger move, at least to 3.14, which I think is a pretty tradable bounce if you manage your risk right. So SUI potentially a bigger bounce here. Let's talk about CRV, which is one of the ones that I quite like because of... There are ones that I'm always looking at in Tau, but I just want to be a little bit careful today because, you know, we could see a little bit of a pullback. But this one, CRV, as you know, I like this because it's focuses on stable coins, which I really do think are going to be the future of crypto. And this looks to me like, did we break out here on the weekly, or is this just going to be a look above? And if I look at this on the daily, you can see this potentially is an inverted head and shoulders pattern. Now, if you break out on the neckline, the last thing you want to see is it close back underneath it, because then it counts as a false breakout. So if this can hold a support, and if we get some momentum in trading today, I'm looking for more upside in CRV. And I said before, when you break from an inverted head and shoulders pattern, the targets, you know, the kind of failed targets and tend to be the equal measured move. So if this is not an inverted head and shoulders pattern, this equal measured move high, which is where the two swings are equal, is here at 0.658. So CRV now, if we come back and retest, we need to close above 0.658 for more upside and this to be a real bottom, and back underneath this daily 200 moving average and back underneath this 0.558 level for me would be a little bit of a fail. I'm, as you know, long. I like this one. I'm looking for that fifth wave higher and it to continue higher, but this is where I'm going to be wrong, and this is where I'm going to get out if that happens. So I still like curve, but 0.658, if we may go sideways here. I'd really like to see a flag pattern or something like that before we break higher, and above 0.6586 now it's really key for more upside in this one. You know, when you look around in the different categories of altcoins, for example, this is POPCAT in the meme coin world. You know, whenever, simple rules, you know, when you're a downtrend, you make lower lows and lower highs, and when you want to reverse that trend, you have to take out the previous swing high and then make a higher low, and then you've reversed your trend. So here in POPCAT, we've taken out the high from the end of March, we're holding above it. This looks like a really strong bounce off the lows, and so in terms of this one, this is looking like a pretty interesting trend reversal. Certainly pretty interesting in terms of these daily moving averages. We've gotten above the daily 50. Usually when you do that, you can come all the way back to the daily 200 moving average. So when I look at this and I zoom out, for me, from this high to low, the tricky level the next tricky level is going to be this 236 fib. So I'm going to measure from this high to this low. Make sure I've drawn it right. And so that comes in here at 0.58. Now there's going to be a little bit of a wobble level here in the middle around 0.34, but as long as we hold above these daily moving averages, I would not be surprised at all, and I would have this as a long target here and buy pullbacks for 0.5814 next. And if I look at this on lower time frames, what you really want to see in an uptrend is a really strong move, a nice three-wave correction, and then continue higher. The problem is, as I said before, you know, sometimes when you see a three-wave correction like this, it'll be 1, 2, 3, and then you'll do 1, 2, 3, and then you'll do one more before it goes again. Smaller three-wave corrections can turn into bigger ones. But bigger picture with these bigger moving averages, as long as we just trade sideways, I like buying the dip in this one for more upside, or for our long entry, which potentially, like a lot of crypto, if we get a decent bounce today, if this one does, I think is a really strong look. So if we can take out these highs here, which we really should line up with these highs, or if we can take out this it's 0.29, I think 0.29 level, then we have reversed this trend. We're holding above the daily moving averages, and again that target 0.58 in POPCAT. You know, in the AI coins, let's take a look at some of those and see if yeah, like there's a few of them. What's this one? VADERAI. We could call this a sideways range at the moment, couldn't we? And again, you know, sometimes when you're looking at these three-wave corrections, they are a little bit sideways or flat. And so here, if I was to measure this most recent swing low to high and then this double bottom here, you can see where we paused was this equal measured move level in this VADERAI, and where we're holding support is this back test of the 61.8, which is our bullish support. I would only be bearish if we got back underneath this or back underneath this daily 50 moving average. So I would like to see this one, if it's going to keep going higher, go sideways, and then a break above 0.0115 would see our next swing higher, and then, you know, these highs, and then we could start talking about this maybe having a bottom. For now, sometimes when you need to go sideways a bit to build a bit of a base, but they are starting to look a little bit more hopeful, and holding above this daily 50 is certainly that. Back underneath it, again, Imperial is the one that I've traded before. We would say same thing here. It's really tempting, isn't it, to push above this daily 50 moving average, which was resistance in March, again on the 1st of April. You know, it's been all the way cactus, and so a close above it today would have a couple of targets. First target is going to be the equal measured move level that we just looked at in, I think, VADER. So we can say holding above 48.5 has a next upside target of 60, which would be the equal measured move level. And if we can get back above 60, we can start talking a bit about bigger upside targets and a bottom in place. I would say, I think I've got 75 highs and lows here for Imperial would be the next upside target, and potentially above 75, you know, then we could talk about back to the daily 200 moving average. So they have stopped going down. Once you stop going down, then you can start talking about, are we going to see a bottom and start going up again? Anyway, if there's anything you're looking at that you think is interesting, let me know and I will take a look at it for you. FATCOIN is another one that I keep looking at. This was a big level. I was looking for a reversal. This is our resistance. We've broken above it. I'm looking for this 0.47 level to hold a support here in FATCOIN, and the next upside target is 0.58 and the high from the end of March. If we look at this one on the daily, you can see we were sideways at these days. It's always a bit choppy, you know, before you get through those daily moving averages, but this swing high becomes my first target, and then second target up here at 0.754. So this is not quite, it's shaping up really well, but it's not quite the bullish reversal yet. So you can sometimes, when this happens, you can wait, let somebody else do the heavy lifting, and then buy pullbacks once we start getting above those daily moving averages. So stuff is looking okay, and we could have a bit of a recovery this week in quite a lot of these assets. Just be careful, there are some pretty ugly ones out there.